Hi, Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. This week was a big change for the financial markets. We had the Georgia Senate runoff, and with it has come some economic consequences, at least the perception of the market. And so, with the Senate falling into the Democrats' hands, we have all three branches of government going into one party, and with that, the markets are reacting on the notion that more stimulus and more fiscal stimulus is coming. And with that carries higher inflation expectations. So what we have, and this is public information, you can go onto the St. Louis Fed website. We're looking at inflation expectations at the highest levels since October of 2018. We're looking at commodity prices go sharply higher. Lumber is at the highest levels in several months and getting to very frothy. Copper, corn, oil, everything's going higher. And that's because of all this money printing that's going to take place. And so it's a trend we must follow because we're watching the 10-year note move above 1% for the first time since really the real dark days of COVID back in March. And that's material because 1% is also a psychological hurdle. So while we don't see or expect a material increase in interest rates because of what the Fed is doing in their bond buying, there will be more pressure on the Fed if the 10-year note continues to tick higher, which is certainly the trend this week. And so what's remarkable and what I would be sharing with clients is that despite all the chaos in Washington, D.C. and this election stuff, it appears that, we have two parties fighting both, on political basis as well as, on science. But when you look at the big things that are happening, the fiscal stimulus coming from the government, the Fed continuing to buy quote unquote, at least $120 billion worth of bonds on a month over month basis, those are the things, and vaccines coming, those are the things that the market is following. So when you see the stock market up big in this, first full week of trading, despite absolute chaos, it's because we're looking down the road. We're looking at, the vaccines being widely distributed. We're looking at economy starting to reopen. And that's all happening probably at the exact time a lot of this stimulus is going to hit the market. So the inflation fears are real. And I would definitely be showing a client this chart. And then what I would leave you with is if inflation does indeed rise further, you want to be an owner of a real asset. And a real asset is real estate, one of them, and it's a great hedge against inflation. You certainly do not want to be a renter in an era with rising inflation. So I hope this finds you well. Have yourself a terrific, safe weekend. Be positive, test negative, and we'll talk to you soon. Bye for now.